and we are going to talk about the masterpiece pattern. Now, this is a pattern that I developed that I've seen happen over and over and over again. Now, it makes sense on what happens when you see a masterpiece pattern, because if you break down the criteria, you're going to say to yourself, this is the only option. This is the only way it can go, and the only way it can go is up. So the masterpiece pattern is one of my favorite go-to patterns, and it's one of the most consistent patterns that are going to lead to gains without any news. So this is a pattern I'm always on the hunt for. This is a pattern I'm always looking for, because even if the stock doesn't have any sort of news behind it, you can definitely still see a very big spike and a very big rip, just like we're seeing today. So what is a masterpiece pattern? Well, this is a simple, effective setup that produces consistent gains. And the lesson that we're going to go into is going to show you the 5 different parts of the masterpiece pattern, because that's how you always want to break it down. Remembering the 5 different steps, the 5 different parts, to be able to say, okay, this makes sense, and the only way it can go is up. So let's take the next 10 minutes and break down each one of these steps, understanding why it's important. And then from there, we can say to ourselves, okay, let's get to the conclusion of the masterpiece pattern as why it would continue to move on up or even be a great swing trade overnight. So first step that you want to be diving into is going to be past chart history pattern. The past chart history spike. Is there a big spike, or was the stock up at a higher price in the past? So that's step 1. Now, why is this important? Why is noticing that this stock was A, up higher in price, or B, had a very large spike in the past important? Because it shows us that the stock can get back up to that area, or at some point had potential to be up that high. Let me break it down like this. If I look at a stock, and a stock has been at $1 its whole entire lifespan, would I want to hop in on that play and say, woo, this one's getting all the way up to $20? No, that doesn't really make much sense, because I know that that stock has never moved off $1. How I always like to think about it, and the easiest analogy I can give you guys, is imagine you're a kid and you go in your neighborhood, all the kids come out and you're playing a game of kickball, and you have 2 captains. Let's say you're a captain and someone else is a captain. Who are you picking on your team first? You're probably going to be picking your team, let's say Bubba. You know why? Because Bubba is going to be the kid who's been kicking it out of the park every single time, right? There's always that one kid that every single time he's up, he's always hitting a home run. He's kicking it, halfway, like a half mile down. Everyone's always scoring whenever he kicks. Everyone always wants him on your team. So the thing is, past chart history is basically like picking Bubba on our team. Hey, I've played with Bubba many times and he always hits a home run. Oh yeah, I want to play a stock that has had big time spikes, because if it had big time spikes in the past, it could have them again in the present. So a perfect example right here would be, of course, looking over on AHT. AHT, this is the masterpiece pattern that we love to be able to see at. So when we take a look at AHT, does AHT's past ever show home run hits? Is AHT Bubba right here, where everyone wants to pick it on its team? I think so, right? We take a look at AHT right here. What's one of the big things that kind of stands out to me right away? I see that AHT has had this big spike from $7 all the way up towards $18. $7 all the way up to $18. Yeah, this is a home run hitter. This stock shows me right now that it has potential to spike. It's not a flat line. This stock definitely has its days and its weeks where it goes crazy and then it starts coming back on down. So AHT right away, sure, I like this play. It's hit part 1. We've checked it off because we know that this stock right here has the potential to go on that very big spike, to go on that very big rip, and to go on that very big run. Now, what's part 2? Because we already have this stock, checked off of part 1. We know it's past chart history pattern. Now, what would part 2 be? Well, if we go down, part 2 is going to be fade and lose the buyers. What does this mean? So we notice we have a very big spike on up. Now what we want to do is fade and lose the buyers. We basically want to become an irrelevant stock now. If you want to find the masterpiece pattern, we want a stock that had a massive breakout. Now we want a stock that is becoming irrelevant, fading on off and getting lower and lower and lower and lower. Now, why is this important? Well, the big spikes shows us that the stock can go on a very big rip and a very big run. But again, we don't ever want to chase a stock all the way at the top. So what happens? We need all these buyers to leave. We need people to get out of this play and get lower and lower and lower and lower and lower, where buyers are almost just giving up on this play, where it's irrelevant. You know why? Because the lower we go, right, the lower the RSI is. And the lower the RSI, the better chance we have to seeing a very big spike and having a very big rip and run. So every single time, of course, we get very low on an RSI, the stock is going to be considered oversold. And when a stock is considered oversold, we could definitely see very big breakouts, very big rips, very big runs. So let's look at a couple different examples, right? If we take a look, let's say over on SNDL. We look over on stockcharts.com, and I can take a little screenshot right here over on SNDL, and I see right here SNDL. Here's the RSI. This is the RSI. We know anything that's underneath a 30 is considered oversold. Anything that's above an 80 is considered overbought. Now, what happens when a stock becomes overbought, right? It's a little difficult to see right here, but the stock fades on off, right? What happens when we get a peak and we start coming up near around, right, being overbought? The stock, of course, starts fading on off, right? What happens when we start coming around the overbought side? When we start coming overbought, the stock starts fading its way on off. Just like, again, we look at SNDL. SNDL is overbought with a 79 today. Guess what's happening on this play? SNDL, right? The stock, guess what? It has a big red candle as people sell it on off. Now, what happens? What happens on SNDL when the stock is considered oversold? When the stock is, again, on the lower side of the RSI. The lower side of the RSI, this, of course, leads to spiking back on up. Lower side of the RSI, this leads to spiking its way back on up. So the thing is, when a stock is oversold, we have a better chance of seeing buyers than we do seeing sellers. And when a stock is overbought, we have a better chance of what? Seeing sellers and shorters than we do of seeing buyers. So if we take a look over on our example so far of AHT, we've had a very big spike, and now over the past, again, month, all we want is, again, people to leave this play, become irrelevant. See people, again, just, get out of this play because we want it going lower and lower and lower and lower. And that's the best thing about this. So we want to take a look on AHT. We could see AHT at one point was all the way up towards, an 85 on the RSI. But notice AHT has just been basically fading off on the RSI for months. And that's one of the best things about it, is that, yes, we were all the way up here at one point, right? Let me put that in our red. We were all the way up here. And guess what happened from there? It was overbought, so the stock has been fading, 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 fading. And you could see how the RSI is also fading, 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 until we start getting back down towards oversold areas. So we have at this moment, out of our two steps, A, a stock that does have the potential to go on a big time spike, and now B, we have a low RSI, which is going to allow this play to have a better chance of spiking than it does selling off, because we're oversold, which means more buyers are going to move in. Already, we're saying to ourselves, okay, hey, I'm starting to understand why this pattern would start ripping and running so well. So let's move on to part 3 now. So part 3 is going to be consolidation. Now, consolidation, when we look at the chart, is going to be that time frame where nothing is happening, where nothing is going on. We're looking at this part where it's basically Death Valley, the nothing phase. And what's the nothing phase? The nothing phase, the Death Valley area, is going to be where basically no buyers are in it, no sellers in it. We know, of course, starting on off, we had our very big spike. Boom, right? That thing shot on up. Then from there, the stock has been doing what? Stock has been fading, 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 fading. And then for the past probably month or so, as you can see, there hasn't really been much action. It's been a little bit of buying, a little bit of selling, not really too much right here. This whole entire phase, right here, that's like the nothing phase, where there's nothing really happening. And again, I'll put the orange arrow right on it. After the stock started fading, it found some sort of bottom support right around 150. Found some sort of bottom support right around 150. No one's really touching this play. But then what starts happening? And this is where we go back to part 4 right now. We start seeing a little bit of higher lows. We start seeing a little bit more hype. We start seeing a little bit momentum. So as we talked about, part 3 was consolidation, aka the nothing phase, aka Death Valley, when it's just a clear view of not really too many buyers or too many sellers. Then we get to part 4 right here, which is going to be building higher lows. And not only building higher lows, but we're getting a squeeze between the most popular indicators in stock trading, which is the 13 EMA, the 50-day moving average, and the 200-day moving average. So we need right now the spark. This is, again, the spark to start the fire on up. Now, why do I pick the 50-day, the 200-day moving average, the 13 EMA? Well, as you guys know, these are the most popular indicators, right? These are the indicators that every single trader should be using. These are the indicators that every single trader should know are the most popular. And since they're the most popular, these are the ones that have the best chance for a breakout. If you guys haven't watched that lesson, make sure you guys go to the video library on tradecaster.com and make sure you guys go through and watch, of course, the indicator lessons, learning which are the best indicators right here. What are the best indicators in stock trading? So again, this is going to be going over moving averages, RSI, VWAP, everything's right here for you, of course, you guys to be able to check out. We did that lesson about 2 weeks ago. So what I mean by looking for a squeeze is essentially, right, and I'm just going to bring up a very kind of basic, very easy picture, is I'm looking for this. I'm looking for a stock that is getting tighter and tighter and tighter and tighter in between its indicators. And this is the spark to get us out of Death Valley. This is the spark to get us out of that consolidation. Because traders are always looking to buy, right? We're hungry, we're greedy, we want to buy, right? We want to make that big time money. So traders are always looking for that next big play. And to be able to see a squeeze pattern when a stock is already slightly trending up, that's going to lead to a lot of hype. Now, what does the green, blue, and red represent? This is, again, just kind of what I always have my charts in. The 200-day moving average is always in red. The 50-day moving average is always in blue. And the 13 EMA is always in green. It's the same exact thing, guys. You know, if you go over to stockcharts.com, right? You head over to stockcharts.com right here. It doesn't matter what stock you put in. You know, go ahead and put in Apple. Right? The 200-day moving average is in red, and again, the 50-day moving average is over in blue, right? But you could see how popular these indicators are. Let's go over to finviz.com, right? We go to finviz.com, we could click any one of these, please. AHT, what stocks come up? The 50-day moving average, and of course, the 200-day moving average. These are the most popular ones. These are the ones you guys want to be using. So when traders use the most popular indicators out there, 50-day, 13 EMA, and 200-day moving average, and we start seeing, let's again get this a little bit closer, we can start seeing that the 13 EMA is swooping across the bottom, right? So we have the 13 EMA swooping across the bottom, and now we're breaking the 50-day moving average. If you guys look closely right here, you can also see we tried to break the 50-day moving average for one time. Right here, right? Couldn't break through it. We try to break the 50-day moving average once again, right here. We couldn't break through it. Where are we breaking through the 50-day moving average? Almost like right at the tip of the triangle, right? Right at the tip of the triangle is where the stock is starting to squeeze. And that's funny because usually on whatever triangle pattern you have, if it's a bull flag pattern or an ascending triangle pattern, it's usually at the corner of that triangle is where the stock gets the biggest breakout, right? If we take a look over on SORL right here, SORL has an ascending triangle pattern at the corner of the triangle, big breakout. You could see SCON at the corner of the triangle, nice breakout. You could see down here, SGY, corner of the triangle, we get a breakout. Corner of SKLN, we get a nice breakout, right? So these are absolutely awesome. We could also see this, of course, over on bull flag patterns. Right at the corner of the bull flag pattern, we get here's, of course, at the corner of the triangle without those trend lines and downtrends, there's a nice breakout. You could see right here, LEDS, you could see right here how great, again, at the corner of the triangle. So when we take a look at AHT, and what do we always look for? Triangles and U shapes. We say to ourselves, okay, hey, there's a 13 EMA great squeeze pattern with a 50-day moving average. Stock is now bringing in buying volume. And of course, because we had an old spiking high, because the stock is now considered oversold because the stock has been fading. Now, of course, everyone has gotten out of the play and moved on of it because it's been consolidating and, no buyers are left in on this play, that it's allowing the buyers to move back in as we break through the 13 EMA and 50-day moving average, which brings us over to part 5, which is the conclusion, which is the breakout, right? So that's the beautiful thing about these plays, right? The beautiful things about these is that we get the breakout happening because everything lines up perfectly, right? Everything lines up perfectly. So if we wanted to go through step 1 through 5 again, number 1, when we see a stock, get a nice big rip and run, and I can really just draw this out and you guys can see how well this works on out, we could see first thing we always want to see is past chart history pattern of a very big spike. Why? Because we know if a stock has spiked in the past, it can do it again in the future. So this is our really big spike right here on our stock. Cool. So what happens next? We fade and lose the buyers. So after, again, we have a very big spike, very big breakout, we have to go through about like a 3, 4, 5 months of just fading and losing the buyers. We had part 1 that showed us that we can break out. Now we again just want to get lower and lower and lower and lower on the RSI until we find some sort of bottom. And that's where we go down into our consolidation. So after we come all the way down towards the bottom, we're at the absolute bottom. The stock is consolidating where we're considered oversold. There's not many buyers. There's not many sellers. The stock is considered irrelevant. Then from there, we start seeing a little bit of a squeeze pattern, right? We start seeing higher lows as the stock starts moving its way on up, right? The stock starts building its way back on up, and we could see at this point, the 13 EMA, could be sweeping the bottom right here. And again, starting to climb at this moment. Also on top of that, we could also see, the 50-day moving average coming across the top. Also, again, starting to squeeze the bottom right here. And then we could have like a target of our 200-day moving average, somewhere all the way up here where the stock starts, has a target to move up towards. And then, part 5 is going to be the breakout where once we have all these things line up perfectly, what do you think the stock's going to do? Gets to the corner of the squeeze and then starts breaking out now as the stock has shown us it can spike in the past. It's oversold, squeezing on higher lows, and has the breakout right on up. Now, where would, again, this picture be compared to? Well, we can take a look. Data, boom, right next to AHT. And AHT, notice how this lines up so perfectly. That is what is the masterpiece pattern. And even a stock with no news, even a stock that doesn't have any sort of press release, any sort of filing underneath it, could still get this beautiful spike, beautiful rip, and beautiful run. So it's one of my favorite patterns to be watching with no news whatsoever. You don't need a press release. You don't need anything on this because when you take a look over on AHT and you say to yourself, oh, wow, AHT, what's going on with this play? There has to be like a phase 3 trialing or something along those lines. Look at Yahoo Finance, scroll down. Last press release was 11 days ago. 11 days ago? Well, why is the stock spiking now? It's because stocks run for 2 different reasons. Either, again, chart setup or news, and in this case, it's purely chart setup. So this is the masterpiece pattern. I hope you guys absolutely loved it. I hope you guys enjoy it. Of course, still looking to trade AHT, trying to add to my $1,800 profit so far. We'll see if we're able to get any more gains on the stock, but an absolute great day so far. Learning more about AHT, and now again, we can go ahead and profit on AHT as we know what's going to be coming on up. So awesome job, awesome work. If you need any questions answered, please let me know. Tradecaster.com. Awesome work, team. Enjoy this lesson.